Hey, in this video, I want to share one of the large reasons why I've decided to really dive deep into reverse mortgages. Part of it is fear of, holy crap, what if we haven't planned properly? And what if something happens that completely decimates our assets? What other financial tools can we have? And the more I have done research on them and have leaned on the resources that we have and the education that we have, I've come to love it. And I'm on a mission to really break that stigma that these loans are a means of last resort. But I'd love for people to think of these as an additional financial tool that you can use in your latter years to enjoy life better. So let me give you an example of a recent reverse transaction that we closed at the end of December. And this might fit the picture of that means of last resort, but this is a game changer for these folks. And I've got to go to my cheat notes right here. Husband is 69, wife is 68. It's highly likely that the husband's not going to last the next few years. And that's just a reality that what they're dealing with. As a result of what's happened in their lives, credit was definitely an issue. And with the new regulations around reverse, they are in a much better position. And let me explain why. Number one, they're not going to have any mortgage payments. Number two, there is what's known as a set aside for, let me cheat again, 192 months for their taxes and their insurance to be paid. So for 192 months, they don't have to pay their taxes or their insurance because there is a large chunk of money that was set aside in order to pay those expenses. So these folks have, in essence, gotten a $28,000 raise annually. And you might be like, what do you mean? Well, they're not going to make their mortgage payment anymore. And their tax bill is $610 a month. Their house insurance is $333 a month. So when you annualize the mortgage payment that they're reducing, or that they're getting rid of, I should say, and look at the taxes and the insurance that they're not going to have to pay for 192 months, it's a $28,000 raise. Many people that are senior citizens, and this might be your traditional reverse mortgage consumer, have to make a decision on, do I pay for my meds or do I pay for my food? No one should have to deal with that. So that's what I'm on a mission to change, besides my own personal fears that maybe we haven't planned properly. So if you want to know more, keep an eye out. We're going to be having webinars 2 times a month for those in financial services. Think financial planners, estate attorneys, CPAs, realtors. And we're also going to have 2 times a month consumer webinars. The more that you know, the more that, hey, it may change your mind or it might not. And the beauty of these products is they're so heavily regulated that before you do anything, you've got to do consumer credit counseling to make certain that you understand what you're doing. This could be a game changer for someone. Imagine no longer having to make a mortgage payment and no longer having to pay your taxes and insurance. In this situation for these folks, it was a requirement because of how they manage their money. Now, other people don't need to have that set aside, but this could really be a game changer for maybe you or for maybe somebody that is in your orbit. So if you're finding this on YouTube, please, sharing is caring. Please share this with a friend or family member that this could help. Please leave a thumbs up, a subscribe, a comment. And if you found this on social media, hey, by all means, share it. And thanks again for watching.